All right, let's get right into it. Take a hard look at your crypto portfolio right now. Are you feeling good? Or is there a little bit of a chill in the air? Today, we're talking about a potentially huge event that could be coming for crypto in 2026. Think of this as your survival guide.
So here it is. The question that's probably on your mind. Is the party over? Are we about to head into another one of those long, cold crypto winters? Because, the signals we're seeing, they suggest we all need to be ready for something pretty big.
And look, when I say big, I'm not talking about some little 10 or 20% dip. No. The data we're looking at points to a potential market-wide wipeout. We're talking a 70% drop. That's not just a correction, my friend. That's a full-blown reset.
Okay, so let's break this down. How do we even get to a number like that? Well, to understand what's coming, you have to look at the warning signs. And right now, it looks like a perfect storm of factors is brewing, and it is absolutely crucial that we see them for what they are.
So historically, crypto tends to move in these 4-year cycles, and all the signs are pointing to us entering the most dangerous part of that cycle, what's known as late cycle distribution. And this definition really says it all. This is the phase where the smart money, the early investors, they start quietly selling. They're handing their bags over to the last wave of buyers who are just showing up to the party.
And this slide just lays it all out, clear as day. You've got the whales on one side, quietly moving their crypto onto exchanges so they're ready to sell. And on the other side, you've got regular retail investors, still caught up in the hype, still buying. I mean, this is a classic, textbook signal that we're near a top.
The on-chain data is telling a really scary story too. Even with prices way up here, the actual number of active Bitcoin wallets has dropped to lows we haven't seen since 2023. What that tells you is that the price is being held up by speculation, not real-world use and demand. The whole foundation is starting to look a little hollow.
And this isn't happening in a vacuum. The bigger economic picture looks pretty grim. The whole era of free money is over. Central banks are tightening the money supply. High interest rates mean you can get a decent return on safer stuff. And to top it all off, major crypto regulations in the US are getting kicked down the road to 2026. It all creates this massive ceiling of uncertainty that's really hard to punch through.
So, with the storm brewing on the horizon, what does it actually mean for your crypto, for the coins you're holding? Let's dive into that, because this is where we need to focus on what these signals mean for the biggest assets out there.
Now, this quote, you need to burn this into your brain. It perfectly captures the dangerous game you play when you hold altcoins. See, if the king, Bitcoin, catches a cold, the rest of the market gets double pneumonia. The real gut-wrenching pain in a crash, it almost always happens in the altcoin market.
For Bitcoin, the line in the sand is becoming crystal clear. Yeah, it's been struggling to hit new highs, but the level everyone really needs to watch is on the downside. That $85,000 mark has turned into the most important battleground, the support level that absolutely has to hold.
So what happens if that support breaks? Well, the technical analysts are pretty much all saying the same thing. If we lose 85K, it could trigger a very, very fast slide. We're talking a domino effect, a cascade of selling as stop losses get hit, and panicked investors all rush for the same tiny exit.
Ethereum's got his own issues too. It seems like demand is getting weaker, and there's a huge price level that everyone's got circled, $2,800. If ETH breaks below that, it could be a signal of a much, much deeper drop, especially with all these competitor platforms trying to eat its lunch.
So, what about all those thousands of other altcoins? Well, in a crash, the market gets ruthless. It doesn't treat everyone the same. The money just flees from pure hype and rushes toward things with actual utility. As you can see, projects based on nothing but memes and hype, they're in the highest danger zone. The safer bets, and I use that term loosely, are going to be projects with a real use case, like an AI or real-world asset.
Okay, so we've laid out the problem. The signals are flashing bright red. But look, this isn't about scaring you. It's about getting you prepared with a clear, simple strategy. So let's flip this around and shift from the problem to the solution.
This right here is the barbell strategy. It's a proven way to get through crazy volatility. Now look at the numbers. Yeah, you've got a heavy 60% in the big guys, Bitcoin and Ethereum. But the real key, the secret weapon, is that 30% in cash or stablecoins. That's not just defense, that's your offense.
Exactly.
That cash is your dry powder. While everyone else is panic selling their portfolios into the ground, you'll have the money ready to go to buy amazing projects at prices you were literally dreaming about just a few months ago. Holding cash in 2026 isn't about being scared of losing, it's about getting ready to win.
And we have to talk about this. This is a critical warning. In a crash, all the people who use too much leverage, they get liquidated. And those liquidations are like throwing gasoline on a fire. They make the price fall even faster. Let me be totally clear. In a market like this, high leverage isn't investing. It's just gambling, and the house always wins.
You've all heard of dollar cost averaging, where you buy a little bit over time. Well, it's time to learn how to do that in reverse. Instead of just buying, you should be systematically selling. Taking just a little bit of profit off the table every month is a disciplined way to make sure you actually lock in your gains before the market decides to take them all back.
Now this is where we change how we look at this whole thing. A crash does not have to be a disaster. In fact, if you're prepared, it's the exact opposite. These are the moments where real, life-changing wealth can be made. And this right here, this is the mindset you need to have. A market crash is not the end of crypto. It's a massive clearance sale on incredible assets. The whole key is being ready to be the buyer when everyone else is desperately trying to sell.
So, what's the plan? It's really just 3 simple steps. First, make your shopping list now, while things are calm. Which projects do you really believe in for the long haul? Second, you're going to set what are called stink beds. We'll get to that in a sec. And third, maybe the most important part, stay rational. This is a cycle. It's happened before, and it'll happen again.
So what in the world is a stink bid? Simple. It's a buy order that you place at a price that seems totally ridiculous today. But during a flash crash, when everything is pure chaos and volatility is insane, these crazy low orders often get filled. It's basically a way to automate buying the dip while everyone else is panicking.
So here's the bottom line. The 2026 market is going to test everyone. It'll be tough, but it's discipline, it's preparation, and it's having the right mindset that's going to separate the people who get wiped out from the people who win big. This is that clearance sale opportunity we're talking about.
And really, that brings us to the final question you need to ask yourself. In 2026, when this cycle turns, and trust me, it will turn, are you going to be a victim of the volatility, just watching your portfolio evaporate? Or are you going to be the one who is prepared, who stayed disciplined, and who used that massive clearance sale to set yourself up for the next bull run? Ultimately, the choice is yours.